Russia is bucking the trends of other developed countries by continuing to produce strong economic data. Unemployment has fallen to the lowest in 13 years, while GDP grew 4.9% in the first quarter in 2012. Joining me today to discuss his insights in relation to the world's 9th largest economy is Dmitry Polevoy, economist for ING in Moscow. Dmitry, in light of these figures, some analysts have said there are certain inflationary risks. Do you agree with the concerns of the central bank maintaining interest rates indefinitely could hinder, not help, the Russian economy?
There are some talks about this overheating signs in the Russian economy, but still, on the one hand, there are some signs, especially on the consumer side, because unemployment hit pre-crisis low. Retail lending growth stands about 40% in annual terms, and also we saw quite healthy dynamics of consumption in Russia. So on the one hand, yes, we see some strength on the consumer side, and this may pose some upside risk to inflationary pressure in Russia. We would agree with the view that there are some signs of overheating on the consumer side, but in general, we don't think that we are facing quite significant upside risks to inflation coming from this demand side. And therefore, we share the view that the central bank, for the next several months, will probably continue monitoring the effect of the utilities and regulated tariff hikes on the headline inflation, on core inflation, and on inflation expectations, and then only decide on the possible movements in terms of the rate dynamics, in terms of the monetary policy. But we still think that our base case is that central bank money market rates will stay either flat or even fall if we see a more pronounced slowdown in the economy in the second half of this year.
Russian stocks traded in New York posted the longest stretch of declines in a month, led by commodities producers on the concern the economic slowdown in China will erode demand for metals and other commodities. What do you think the biggest risks to the Russian economy's success are, and why, and how should those be combated?
Yes, actually, the recent macroeconomic data from US and from the Eurozone clearly shows that the economy is slowing down or even falling into recession in the Eurozone specifically, and all this no doubt pose downside risk to Russian economic growth, because around 50% of Russian exports goes to the European Union, and this clearly suggests that we are at risk if the Eurozone situation continues to worsen. And the second factor is that the slowdown in the global economy would threaten the oil prices and other commodities prices globally. And over the last 2 months, we saw the quite significant decline in oil prices, and this was exactly the key factor of weakening sentiments of global investors towards Russia. And therefore, these two risks should be taken into account and should be monitored further when judging about the Russian outlook, when judging about Russian economic outlook, when judging about Russian stock market outlook, and so on, and ruble, and of course, foreign exchange market outlook.
After an 18-year negotiating marathon, Russian lawmakers voted yesterday to ratify accession to the World Trade Organization. The deal will oblige Moscow to cut import tariffs and open up key sectors of its economy to foreign investment. The economy minister said although WTO carried risks, they would be outweighed by the benefits. Dmitry, what are your thoughts?
This will set up the quite different rule of trade, quite different rule of behavior for Russia, for Russian companies in other countries, and also the behavior of foreign companies in Russia. And this is, I think, this would be strategically good for Russia in terms of the stimulating the bilateral trade between Russia and our key trade partners. The government will probably continue to support the most vulnerable sectors during these transition periods, in order to support the competitiveness of these sectors, in order to support employment in these sectors. And the budget is expected to have some negative implications of this WTO accession and the reduction in import duties. But the Ministry of Economy thinks, and we clearly share this view, that the more intensive trade may increase the tax base, the overall tax base for these import duties and export duties, and therefore the net effect will be not as pronounced as it shows, as it appears on the first look. We think that on net it will be positive for Russia. It will be positive for Russian consumers and also for global investors' perceptions about Russia.
Finally, taking all of this into consideration, what do you think the future has in store for the Russian economy?
This is a long-lasting question about the Russian outlook, about the Russian prospects. And if you look at the current expectations from different sources, and if you take into account our expectations and compare this forecasts of growth with the pre-crisis dynamics, Russia looks not as good as before. There are huge potential to develop production locally in Russia, to develop non-commodity sectors, and therefore I think if we have this mix of prudent fiscal policy, of prudent economic policy, if you see further focus on these institutional issues, if you see the further government focus on these investment climate issues, Russia may significantly increase its growth rate of the economy in the coming years, but still it's yet to be seen whether the current government, whether the ruling camp will succeed in this area or not.
Sadly, that's all we have time for at the moment. Click back to DukascopyTv for today's press review with my colleague Navjit Gurewal, but for now, goodbye.